Good morning, everyone, and welcome to the European crossover webinar. And for a moment, I thought I wasn't sharing the screen or the webinar wasn't up right, but it is. So thank you very much. And a moment. And let's see here. We just got in Italian retail sales. Came in at 0.6%, 2.9%. On year-over-year retail sales. And then we do have market PMI UK data. That's going to be at the bottom of the hour. And then, of course, at 8:30 Eastern. One moment. And then, of course, at 8:30 Eastern, we'll have the NFP data. And we're looking at, wow, payrolls are only supposed to be 469,000. And employment rate and all that's not really going to matter that much anymore. Just going to be the print. And then we also do have Canadian employment data. They're looking at 20,000. Then we do have durable goods at 10 a.m. Eastern with factory orders. And that'll be it. But obviously, as they call it, the big granddaddy of them all is going to be non-farm payroll. And we will have Canadian data, which is kind of interesting because the dollar CAD is just in a very, very weakened state at this point. And with that, we'll go in and take a look at where data stands or where the market is for the moment. Dollar index is off its lows. And we'll take a look at the euro dollar. And boy, we're still pressing hard here. 2161. We know that 2145 is that key weekly level. We'll see what we stand at the time. And take a look at the cable. Still above 34 cents, although at 34.23, we did make that run up here to 35. Now, yesterday was relatively quiet, but we stayed firm throughout the day and talking about the indices, and we'll take a look at that right now. And you can see here with the NASDAQ is just hugging that line. This is on the 30-minute chart. And this really takes us here with this trend line and parallel trend line we had in place. You can see that here. Look, the market has held up very well. Let's go on and move in. Here we are on the daily. And I'm not even going to give a, where we could move. We'd already, remember with the prior one, we'd already gone to the 161%. I guess you'd be looking at here, and that would really push us. I'm not sure how much we're going to push higher. One of the things I noted in the chat room was, look, the market had the opportunity to go down, and it didn't do it. And when we look at it, is probably a better move here. We had the opportunity to go on and break lower here, and I even said which was going to be on Wednesday. On the rebound, I would have thought we would have stalled here and then rotated lower. But we had the opportunity, like I said, to kind of after hitting some key levels to be able to break down, and it simply didn't. So those people that are long, they're not going to get out until they get rewarded. And as I mentioned, we're still holding here. So can you imagine just saying, oh, what the heck, it's overbought. Let me get short right now. I mean, like I said, we're going to have to go move higher before that's going to happen. And, to be honest with you, I feel bad for anybody that's short here because you got to be just, shaking in your boots here, because at what point do you, you'd have to think of just the first part of the stops is going to be right there, 540. So you're talking 30 handles higher. And even then you have to give it some room. And probably realistically, you'd have to look at this here on a short-term basis. That'll probably be the first area you go for, which is right there, 12,565. For starters, that would be the 127% extension. Is it right there? And go 161% on a very short-term basis. You're looking at potentially, and that's not that far away, 12,635. So you're talking about 125 handles higher on 161% extension from the high here to the low there for starters. But immediate, you'd be looking at 566 right there. But as I mentioned, they're not going to want to get out of this thing until they get rewarded. If you're long, then the point I'm trying to make is if we're holding here and you're long, you've got no reason to go and get stopped out. You're like, okay, well, they're going to have to go and take me out here before I start to go and give up some, willing to give up some of these levels here, or in a sense, exit some of these positions. So for starters, it'd have to be right there, your first key area, which would be right there, 12,412. Once you got below this, you can see the touches here also. Then if we bought below here, you take out some stops. And then on the way back up, you might start to see people, sell on the rally back, maybe exit out of some of their longs. Some people also getting aggressive to sell. But you have to see this momentum change. One of the things that's helped me as of recent, I've tried to get out of, I wouldn't say get out of the pinch of just selling a rally. But if you wait, you have to give it the first time. It's the old saying, or cash, you say, second mouse gets the cheese. So, but that being said, just like with the euro, we've come at some key levels. That weekly level, I think that's going to be huge, which is 21.45. But until you see the market get, especially when it's a strong market, you can say right now with the euro, you can say with the NASDAQ, maybe to a certain extent the S&Ps, until you see the market start to really tire, and then that's not even enough just to tire itself out. You have to start to feel that momentum start to change here. So, good example right here. You see the market pop up, we come back down, we kind of stick around here, we make another run up here, we run out of gas and we break. When we break here, now this market could have started to get a little bit tired, maybe move back up and rotate lower. Look, instead, it moves back up, holds, then moves up even higher. Maybe not a whole lot higher, but the point is that if you're short, you're just that much further in the hole. If you're long, well, maybe not that great a position, that you came in, but look, you're still being rewarded. You see what I'm saying? So there's no need for them. Anybody that's long from, let's say, here, whatever, there's nothing that's happened so far that's going to necessarily push them out of the position. They're just like, no, there's no reason for me to get out. I'll just wait until I get an even better price. The market, the momentum is in my favor. And you can see that here. This is like the way this market yesterday, I didn't even have a single trade in the NASDAQ. Just sat there like, at least I'm glad that I wasn't trying to fend this. It did go in and break a little bit low in the day here. And I said, you know what? Nothing's really changed. I'm not going to get involved in it the last, 30 minutes of the day or 40 minutes of the day after it's held up. And certainly, we came right back, snapped right back and popped up here. And we actually held against this on the, I think it was a 2-day VWAP at the time. So let's go on and move back in. Well, actually, before we do that, we'll go on and take a look at the news. So the Australian and New Zealand dollars take breather after scaling steep chart barriers. The Australian New Zealand dollars eased off multi-month highs on Friday as the latest rush past major chart barriers left them looking stretched in the near term. Both currencies have rallied in recent weeks as the prospect of a vaccine-fueled global recovery next year boosted risk assets and toppled the safe haven U.S. dollar. The Aussie was resting at 74.26 after reaching 74.49. Heights last seen since August of 2018. The Kiwi backed away from 70.57. Some analysts cautioned a pause was due given the currency has climbed 6.8% in just 5 weeks. The New Zealand dollar has reached the multi-week target of 71 cents, and while further near-term gains are possible, we note that it's getting technically stretched, and we will be watching for signs of a corrective pullback, says Emery Spitzer of Westpac. Longer term, we forecast 72 cents by year end and 74 by mid 2021. The main drivers are improving global risk sentiment and an outperforming New Zealand economy relative to the U.S. Australia's economy also rebounding, containing the coronavirus, and allowed consumers to go shopping and house hunting. Figures out on Friday showed retail sales jumped 1.4% in October as the state of Victoria reopened after its marathon lockdown, while card data from the banks showed both spending surged through Black Friday and Cyber Monday. That strength, combined with the global shift to risk, has seen Australian 10-year bond yields rise 21 basis points over the past month to 99.9. Excuse me, I was just getting a sip of water. Jack Chambers, a rates strategist at ANZ, argued bonds could rally next week should the European Central Bank aggressively expand its asset buying program, as some suspect. We think it's increasingly likely that the Federal Reserve will do something in December or the beginning of next year. The most likely change is to focus its asset purchases towards the longer end of the curve. Yeah, I've seen that. Talk about that too. Euro headed for the heavens as dollar enters purgatory. The euro was headed to the best week in a month on a Friday and has blown past major resistance levels as investors piled into the bets. The US dollar has further to fall as the world begins to emerge from COVID. The common currency is up 1.5% for the week so far, last comfortably at 21.40. Having finally breached the 120 area after multiple attempts, momentum funds have surged in long positions. The next series chart resistance is not until 25.55. The euro is also set for its best week against the Japanese yen in 6 months. The euro is holding above 121 level for the first time since 2018, despite the fact that there's only a week to go before the European Central Bank expected to add more policy stimulus. There's no doubt that the actions of the Federal Reserve have been hugely successful at weakening the value of the dollar since the spring this year. Investors have turned heavily short dollars in recent months, figuring rates will stay low for a long time in the U.S. and facing yield seekers to heads elsewhere. Against the basket of currencies, the dollar has shed 12% from the high of 102.99 in March. The Aussie dollar struck a 28-month high. The New Zealand dollar made a 31-month high overnight. Call it December seasonality, come early. Call it what you will, but the market's appetite for the Kiwi is insatiable at the moment. And the rubber bands of momentum and valuation are starting to get stretched. Technically, it looks very solid. Commodity prices are rising, and nobody wants to own dollars. Even the worries about the painful winter of deaths and lockdowns in the U.S. has failed to drive much to the safe haven demand for dollars as investors reckon on more government support, either in the monetary easing or fiscal printing. A $908 billion aid plan gained momentum in Congress Thursday as conservative lawmakers express their support and the Federal Reserve meets later in the month, and speculation could expand of a bond buying program. Amazing. Not even any talk about the non-farm payroll. Investors looking at the U.S. jobs figure due later on Friday for the latest signs of recovery losing momentum, while the fate of the pound is largely in the lap of Brexit. Traders need to assess their sterling exposures into the weekend, said Chris Weston. If I were running long exposure, I wouldn't be adding, but questioning if we will see a deal, how punchy the gapping risk will be. He said, if we don't get a deal, and the rhetoric from the EU negotiator Barnier and British camp shows limited progress in what we could see the sterling go gap lower on Monday. So with that, we're going to move into the analysis. This euro is something else. Here we are on the weekly chart, and as I mentioned, we're above that key level 2144. Well, 2145 is the level that I was referencing here. And let's go back. And you can see here that when the market originally came up and took out the 21 area, we actually pulled back right just to here, almost at the 2145. We rallied up to 2555, held there for a few weeks, and then came back to tag 2145, rallied back up, and then we broke through there. We really came apart. And so you can see the significance of the 2145. Hence where we're at. Now, the week's not over. We're going to have to wait and see how we close, but that's where we are. I mean, right now we're up here in the stars at 2165. Let's come back into the daily data. No, we don't have to. We can still stick with this week data. So there's no changes. Resistance will be the 2145 weekly level, confluence with 2144, the 78%. Support will be 2010. So no changes here, although you have to give it credence to where it was yesterday, which the high was 2168. So you could put in here 2168, but 2145 is that key weekly level. So I'll tell you what, we'll do it this way. That's huge. This 2145 on a weekly level. But 2168, they got to that yesterday. Got to respect that. So, and we're right there knocking on the door. Now, how much further? I'm not, the thing that makes it tricky, and I think today's tough, I think you're going to have, wide levels. You could see this market potentially maybe rally up towards 122, yet end up closing the week sub 121.45. Like, I'm not saying it's going to completely come apart, but you could actually see this market turn around and close, let's say, at 21.17. Doesn't sound like much, or 21.10 after it went up to 22, towards 22. So it could look like, wow, this thing really came apart. But then if you look at it in a longer term point of view, like on a weekly, if this thing closed at 120, that would still be solid as a rock. Yet in the meantime, we could rally closer to 122 and end up coming down and closing off from the highs 80 pips and still look strong as an ox on the weekly level. So just something you want to take into consideration. Let's go and take a look at the cable. Cable closed at a new high. The resistance will be 35 even with support at 33.92. So 35 even. And right now, I mean, the way indices are acting, it's just like they can hold them hostage, at this point. Um, any shorts I'm talking about in against these pairs. So you got to be careful. Cable's a bit trickier because of where it's been and the risk with the whole Brexit deal. We'll move into the Aussie dollar. So the Aussie closed at another new high. Resistance will be 74.59 with support at 73.56. Next comes up the Kiwi. Oh, finally we saw a little bit of a turn back here. God, it's unbelievable. I mean, it's hard to even get a read on this because look, it's had such a run, but you have to look at it for perspective. I mean, we could pull this back and ease into here, but look, I mean, you really look at it from here, from let's say 68 and a half, doesn't really give it justice to where it's at. When you look at it, then you say, wow, this thing is really in the stars. So the Kiwi posted a doji on Thursday after challenging the 71-cent even area. Resistance on Friday will be the 71 cents with support at 70.02. Onto the dollar CAD. So the dollar CAD closed at new lows, looking perilous. Support on Friday will be the weekly level once again. I put 29, 20, well, it's 28.12 because I was saying, God, can you imagine how quickly this moves? We were looking at 29.09 yesterday, and that's a weekly level. So we closed it below that. So we do have another level at 28.12. That's going to be support with resistance at 29.23. So 28.12. If we get down there, they may want to take out the stops just below 28, but 28.12 is a weekly level. Although yesterday or leading into yesterday, 29.09 had been a weekly level, which the market was respecting. So you can see how the market, once it got below the 29.09 area, it accelerated and moved lower, and really we have the door open to get down to 28.12. And this is going to resist is going to be 29.23. I mean, people are not going to stand in the way. That's the thing, is you could go to these you almost get to where you on a highway, you're going past mile markers, and you think, well, that doesn't mean nothing. It does. It's just that the momentum is so strong, and you see where equities are at, U.S. equities. There's no reason to stand in the way. So you just blow by some of these numbers. Now, they will mean something, but once again, you have to wait for this momentum to slow down. And there isn't a reason for it this time. So let's go and move into the peso. So the peso closed at a weekly level of 1988. Support on Friday will be 1980 with resistance at 1998. I mean, it's just amazing how we just keep going lower. I mean, it's not on the peso was doing a pretty good job for a while trying to hold the 20-cent level. But my point is, as in totality, the euro, the cable, the Aussie, the Kiwi, dollar CAD going lower. I mean, it's just like, it's just the momentum so strong. It's just, moving wave over wave over wave. Let's go move into the dollar yen. That's why the analysis right now, there's nothing, all you're doing is throwing levels. I mean, not fake levels, but levels that you're going to look at, because that's what the market's just doing. It's just moving from levels, and where's the next logical level? Dollar yen's a little bit different because it's been kind of like back and forth. So the dollar yen broke lower on Thursday. What else is new? Dollar yen's breaking lower. Support on Friday will be 363 with resistance at 430. And on to the cash dollar index. So the dollar index support on Friday will be 90.28 with resistance at 91.12. And on to the crosses. And we're getting that UK data is going to come out. So on the Kiwi yen, we had 74.01. We have rolled over from this area here, and we've started to rotate a little bit lower here. Finally, resistance is going to be this close right there. We'll pull this out here. That would be resistance right now, which can be 73.70. And support back down to this level. If we do break them and start to roll a bit lower, that's if we do come off. And we'll have to see how equities react. You can make the case actually right here, 72.91. Let's just go with the wick right there, which is 72.85. Onto the euro pound. We had 90.74 previously, and I mean, we tagged up here at 82. 74 was good. We're going to keep the 90.74. And on the downside, you see right here, this body right there, that's going to be at 90.08. Onto the Euro odd. The high we had was for 63.71. The market is getting a little bit tired. You can see we did make yesterday, or the day before yesterday, we ran up here before above 64.10. We'll give it a little bit of the benefit of the doubt here. We'll go with the 64.10. And boy, we can't turn things around. Look at that. Came back so strong. Support now is going to be this wick right there. We'll keep it pretty tight for the day. Actually, right there, coming across. So that's going to be 63.35. But today, I think it's going to be fairly volatile. You got to be careful today. And it might hurt, but some of these positions, you might get stretched on some of these if you're on the wrong side of the boat. It's one of these days where I think you almost have to wait. You have to really, realistically, maybe even wait till the close, because then you could end up getting stopped out, which that's smart. You want to limit those losses, but then it could be a frustrating day where you say, expletive, and then you say, look where it closed. You see what I'm saying? So, i.e., an example, let's say the euro, you could see this thing maybe tag 21.92, but end up closing, and you're short from, let's say, 21.40, or you're short from 21.30, and see this thing tag 21.92 to end up closing the day at 120.07, and you get stopped out for a decent loss. Yet, had you hung on, you'd have been in the money. Only to see, though, technically the market still be strong as an ox. I mean, any closes above 121, even if it's 121.01, is still going to look solid as a rock on a weekly. So my guess is we could, easily break the 121 area, maybe close at like 2082 or something like that. Well off the highs, but you could easily end up getting stopped out depending on what your area is. I think it's going to be that kind of a day. Looking at the Euro Kiwi, we are really seeing some short covering here. But I think this is going to be some resistance there, at least for now, 72.84. Although the Kiwi started to tire out, so we might be able to push up a little bit higher. If you look here, you see these bodies and this close there. I think ultimately that's going to be a key area there. And that actually almost comes in line with this one right here. So actually, you see right there? There. Ultimately, I think that's where we're going to go to on a rebound for starters before you see a pullback. But resistance, let's go with this wick here, right there. It just goes just above that body, and that would be 72.93. And support's going to be this wick here, along with this body. That would be 71.89. Onto the Aussie yen. They did get to that 77.55. So we're going to keep that there. And for support, we'll go with this body there. 76.92. And onto the guppy. pretty much quiet. We'll just let's go with this wick coming across, and that'll be 39.19. And on the upside, 140. Well, 40.04, that'll be fine. And lastly, the sterling odd. We'll go with this yesterday's high, which is 81.43. And on the downside, just respect the level 80.39. And you can see the euro still holding up relatively well. And that takes care of that. And you can see where we are with Apple. We're still holding up. We're looking at 30-minute, but we're still holding up very well here. If we take a look at our daily, key on here is going to be 124. Maybe we can pop above it. Take a look at Microsoft. 216 is key. Amazon still 32.20 is somewhat of a line in the sand. And that's what's surprising, because if you look here, it's not like as Amazon's taking out the highs, but look where we're at with the NASDAQ. And look at Microsoft. Yeah, we're hit. This is a bit of a conundrum here. So you look on here, and that's why I wanted to look at these dailies. So here's Apple. Now, we're doing very well here, no doubt about it. But are we at all-time highs on Apple? No. We haven't even taken out 124. Now, we've done great coming off of these lows, but the market is a bit stretched here. We take a look at Microsoft. The NASDAQ is at all-time highs, but is it Microsoft at all-time highs? No. We're not even above 216. We took a look at Amazon. Is that at all-time highs? No. We haven't even taken out 32.20. We did a couple of days ago, but you can see the significance of 32.20 on a closing basis. We're not even above 32.20, yet the NASDAQ is all-time highs. We'll take a look at Google. Now, Google has made a good run here, okay? Although right now, based on yesterday's close, we're looking at a gravestone doji. Let's see where they are in the aftermarket hours, pre-market. 1821 is where they closed. We are at 1821. NVIDIA, we're doing okay. I mean, this is better than okay if you look at it on an overall longer term. But once again, you look at it, if you were thinking about the NASDAQ at all-time highs, well, would that mean NVIDIA at 600? Or NVIDIA at 575? Or NVIDIA at 560? We're at 535. Now, that's nothing to sneeze at. But look, we're not even above 551. Now, let's take a look at Facebook. Nice move higher here. But you can see even yesterday's bar. Look at that. Well, yeah, that's not even yesterday's. That's Wednesday's. And look how we closed yesterday, lower. And you know how much of a momentum mover Facebook is. You see, you wouldn't think, wow, the Nasdaq's at all-time highs. Shouldn't Facebook at least be up here at 300? You see, so it kind of makes you like wonder. Let's take a look at Tesla. That's and a lot of times some people say, well, it's at this price or that price. I don't put too much stock into it as far as the overall NASDAQ, but that is a bit of a conundrum that we're looking at. Obviously, this is a new at higher highs. It's kind of in its own stratosphere, but Tesla in and of itself doesn't even move the entire NASDAQ. And look at Netflix. All-time highs, 572. And we're at 497. It really should be up here at 521. We're not even above 500 now. So it's things that make you kind of like, I don't know about this. That, and then, as I mentioned, you come back and you see where we're at. Look at this. We're really way up here in the stars. Here's on the 2-hour chart. Here's a daily. Look at the daily up in here. So when you look at that, you're like, okay, I'm looking at the big 8, or I call them the big 8, the Fang Man, plus Tesla, and what the heck? This is a breakout area. Why aren't the others? I mean, okay, maybe not all of them, but at least 3 of them should be in breakout area, or 3 of them should be at the very highs, and that's not the case. Tesla is, and Google, that's the only 2, and Tesla's like more of an outlier. So really, when you look at the Fang Man, as I said, it's only Google that's at all-time highs. The others aren't at all-time highs. They're not even close to all-time highs. They're not that far off, but they're not close. So you may wonder how much more juice is left in this thing. Now, here's one thing you do want to focus on is that we did see, not a whole lot, but we did see a late day sell-off yesterday, although they brought them back, but they quickly came off. And then they brought them back or holding up, but it just makes you wonder if you're long, you're like, okay, I'm still riding this out. You can see here on the exponential moving average, we're still in the buy mode, but we are seeing at least a little bit here. Some whippy activity. This time it was a little bit lower high and lower low. And that might have, I wouldn't say spooked people, but they said, okay, hold on. And it came back. Now on this rally back, people might say, I think I'm going to take my profits on the run here. And we already know that looking at the first significant, not this one, but the first significant area from top, which was over here at this 25.13, that was a Sunday night high. And I think this was what the Monday low, if I remember correctly. So when you look at these two, then you're going to base your fib on that. And 127% extension is 12,566. My guess is on this first run up in here, you will see some profit taken. Doesn't mean it's going to try and come all apart. Maybe if we'll see this number come up here. I just don't think the non-farm payrolls are going to be that much of a driver. That's what I'm saying. I just think it's going to be like where they open, where they push them, and you may see a little bit of waves in the sense that I think yesterday's last hour was indicative as the market getting a little bit nervous being up in here. They did bring them back, but a little bit nervous. There wasn't no reason to see wholesale selling going into NFP, especially when the market was holding up so well. So we shall see. But anyway, that's what we have for today. You can see here, look at the S&Ps. It's even moving higher. Look at that. Right here. We'll see what happens. I think we can break higher. It's just that, once again, like I said, we'll have to see. I think it's going to be tricky, and I think that they're going to stretch some of these limits, and then the key is going to be the close. And I think it's going to be a lot of action in the last hour and a half. With that, good luck to everybody, and thanks for joining us here on the European Crossover webinar, and we'll see you in the chat room.